right. So thanks for joining, everyone. My name is Chris Hughes, and I'm the Transportation and Logistics Practice Leader at G2 Capital Advisors based here in Boston. Got nearly 30 years of commercial and operating experience in and around transportation, logistics, supply chain industries. But I've spent the better part of 15 years specifically within the cold storage industry. First as Chief Commercial Officer at Americold Logistics, and then in full transparency, working alongside my cold chain industry guests here today at AGRO Merchants during its inception. As most of you are likely aware on the call, G2 Capital Advisors is an operationally centric boutique financial advisory firm, providing both investment banking, financial advisory services under one roof, primarily to the lower middle market. We've seen a lot of investor interest and activity around the temperature control space, and have been supporting and actually closing a number of temp control transactions at G2 over the last few months, whether that's storage and distribution, transportation, last mile delivery, or in some cases, technology-enabled solutions around that. So with that in mind, we thought it would make sense to hold kind of a brief but interactive discussion around some of the global cold storage industry fundamentals, growth drivers, market trends, and how those might be impacted coming out of the COVID pandemic. So we encourage the audience on here to add your questions as we go along. So we plan to cover those at the end of the session, give it 10 or 15 minutes, let's say. And also this session will be recorded. And a copy of this entire discussion will be made available to the audience shortly afterwards. So with that, we're really thankful to have both Carlos Rodriguez and Adam Rushby from AGRO Merchants Group here with us today. Just for some context, AGRO was founded in 2013, and along with its financial partner, Oaktree Capital Management, it currently owns and operates nearly 8 million cubic meters of temp-controlled warehouse and distribution space around primarily key port locations, supporting import-export product largely. But those operations span across the United States, Europe, Australia, and South America. And after 7 years at that, they're now, I believe, the fourth largest cold storage company in the world, behind Lineage, Americold, and US Cold. So quite an achievement there. Carlos Rodriguez is the CEO and one of the co-founders of AGRO. He brings with him more than 24 years of leadership experience in the supply chain industry. Prior to partnering with Oaktree, Carlos was a member of the Americold executive team with global responsibility for solutions, engineering, planning, and development. Adam Rushby is the Executive Vice President of Engineering and Solutions at AGRO, and brings more than 18 years of engineering, solutions design, and commercial experience in the logistics sector. And he's responsible today for AGRO's engineering and solutions function. His focus is on facility maintenance, energy management, logistics solutions, capital projects, and industrial engineering, just to name a few. So welcome, Adam and Carlos. We're glad to have you.
Thanks, Chris.
Hi, good afternoon.
So to kick off the discussion, I just wanted to ensure, and actually we probably smart to frame the dialogue up a bit for our audience as we think about the topic and the global cold storage industry as a whole. The cold chain market for trans and warehousing is quite large, as you guys know. I think some estimates it's supposed to be around 210 billion today, growing to about 310 billion by 2025. So kind of an 8 to 10% CAGR in terms of growth, driven in large part by, big economies, emerging economies like India and China, when we think about it globally, where real income growth, increased demand for frozen and refrigerated products, and likely a lot of foreign direct investment over the last 5 to 10 years kind of propelling that, both in terms of the number of facilities, their locations, and absolute capacity. But for this purpose of this conversation, I wanted to be clear, we're going to cover the third-party temp-controlled industry. That's to say the public refrigerated segment, and not those facilities and operations that may be owned or leased, let's say, by the manufacturers or the retailers of perishable product. So kind of an important distinction as we talk about it today. And that market, that third-party cold storage market, tends to support the needs of food manufacturers and processors, let's say like Heinz or Tyson, fruit and vegetable growers and distributors, wholesale and retail grocers like Kroger, Publix, Stop and Shop up here in the Northeast, or food distributors like Cisco. So just as an example, those tend to be the customers whose products are residing within those kinds of facilities. So Carlos, I'm going to let you kick us off. You know, you've been at the industry for quite some time and obviously running a very large business now. What are some of the key drivers in your mind that are contributing to the industry growth, the strong growth that we've seen over the years? And what do you think is going to continue to propel that need for capacity in the future?
Sure. And so I obviously I will talk in general terms, but also be specific about how I see the industry and things going for agriculture. Obviously other players are experiencing similar trends, etc. But I will tend to answer my questions more specifically to what I see within Agro Merchants Group. So, I think it's clear to see that in every of the regions where we are, that is 4 continents, we see that the consumer, the ultimate consumer at home, wants to have every type of product all year round. So, many years ago, it was, a lot based on seasonality and etc. But these days, the consumer wants to eat any type of product all year round. So that increase is also part of, we see the increasing demand especially from an import-export point of view, that when, many years ago, maybe, people were not importing, certain products during times of the year, and now, it's constant. When it's not coming from South America, the product is coming from South Africa, and if not, it's coming from Asia, etc. So I think that is one of the key areas where we see growth, the growth of the last years and trending. The other thing that we see is customization. So we see more and more that especially the retailers and the users of the cold chain industry, they want to customize products more and more, depending on the shape, the quantity, the packaging, etc. And that also, in my opinion, drives the need for having cold storage space also closer and closer to the consumer. So, and we see that with a variety, in the poultry industry, we see that also in the fresh produce industry, in the, packaged foods segment, etc. So just going back to my previous point, the demand or the customer demanding all type of products all year round, the customization, and the ultimate customer wanted to have products in certain shapes and forms. Of course, also, especially in the case of Eastern Europe, and Poland is a perfect example. The consumer in Poland today expect the same variety of products that you see in the US or in Western Europe. And also, the economy and has grown a lot in Eastern Europe and continues to grow over the last years. And that also drives, more spending. The level of spending and consumption has increased. But I think you can generalize that to almost every part of the world. Well, so I think, that those are the main drivers for, at the end of the day, that we see as growth ultimately when you run cold stores. And I have to say also, one aspect that we see that is important, at least from an operator of cold storage point of view, is that there are also in the industry quite old infrastructure. I don't want to say that it's becoming obsolete, but it's, coming to the last part of the usage of those buildings. And we see also many of our customers, for security and health and safety and, basically integrity of the product, that is, part of the demand of the last years. And many of the projects that we have in our pipeline are related to both things, the higher, movement of product and consumption, but also some of the space is becoming obsolete, and there is a demand, for newer space.
Excellent. Thanks, Carlos, for that. And just logistically, we're getting some comments that we've had some echoes. So whoever's not speaking, let's make sure we mute for those answers from behalf of our customers here. Okay. So thank you so much. And I think kind of a follow-on to that. So I get a lot of questions around barriers to entry into this market. You know, obviously we have some investors on the phone, and as you think about this industry, how difficult it is to enter, you know, capital intensity risks. So, you know, I guess if you think about your experience in entering and growing through a buy and build strategy, how does a player who's participated like yourselves in a good chunk of the consolidation industry, you know, how do you think about barriers and more importantly, creating value and stickiness for your customers over time? And Adam or Carlos, you guys, either one of you guys.
Sure. So you know, I would like to say that it's very difficult and impossible to enter the market, okay, to limit the competition, but of course it's not the case. But I think, you know, I would say at the end of the day, the relationships in the food industry are very strong and very important. I think the trust from customers in making sure that they are working with a company that provide quality of service, that is responsive, that can accommodate changes on a daily basis, etc. I think that is a key, you know, criteria that customers, you know, is absolutely critical and important for them. I would also say that the geographical location of the cold store is absolutely, you know, paramount and extremely important. We have been fortunate that, you know, when we started 7-8 years ago, we managed to, you know, to acquire or to build, you know, some buildings in certain locations where at that time there was, you know, not a space available, and in many cases very in the ports or proximity to ports, where it's very difficult, you know, doesn't matter in which country you are, it's very difficult to acquire land or lease land, etc. So, but, you know, to answer your question, I would think the main barriers of entry, I would say, are geographical location. And, you know, of course, it's a capital intensive business. So especially traditional, you know, historic, you know, small players, you know, didn't have the possibility to just build 3 or 4 or 5 or 10 buildings. You know, they were mainly focused, you know, 7-8 years ago, especially in Europe and still today in South America and other parts, they were just focusing on one small business that for, you know, several reasons grew over the years. Of course, things have changed the last 10 years or 15 years with, you know, private equity and you know, infrastructure funds and other type of players coming into the industry. You know, the lack of the capital intensity part that was one of the main barriers 10-15 years ago, you know, it's not a barrier anymore because there is so much access to capital. But if I focus more on the relationship side, you know, quality of service is absolutely critical. I think also the know-how. You know, I can give you an example where we were trying to implement a poultry repacking operation in Ireland. This is 3 years ago. And it was almost impossible for 2 or 3 years to convince a customer to allow us to build part of the facility to accommodate that service. However, once we had a similar operation through an acquisition in the Netherlands, and we took the customer there, show, look, we are doing this in the Netherlands, we can do this in Ireland. It took us almost a year and a half, even by showing them the same type of operation, to trust that we had the knowledge and the know-how to do that, the same thing in Ireland. So I'm giving you, Chris, just that example because, you know, it's just to show one of the barriers of entry is, you know, making, you know, convincing, if you like, customers that you have the capability and the knowledge, you know, to basically perform the service that many of them are performing historically in-house. And I would say the last point is really value-added services and trying to differentiate. So, you know, there are many things that we within Agro Merchants do today in New Jersey, in Georgia, in Poland, in Europe, in Chile, that of course, you know, I cannot say that they are unique, I cannot say that they are rocket science. However, I can tell you that some of the experience that we have with fresh produce and beef and poultry and how we process the product and repack and the value add, or we have, an optical grader in Violent that, it was developed, the technology, with a third party, but also with the experience of 20, 30 years of the people that we have in Violent. So all of those things, again, is not rocket science, but, it takes many years to, of development and learning, etc. So when somebody new, comes and said, oh, okay, I'm going to set up a large scale fresh produce or beef repacking operation, it's not as simple as, oh, I just build the building and hire a few people. There is a lot more to it. So I don't know if that answers your question.
Yeah, no, very helpful, Carlos. And no, I think that's very, very well received here. And I think it kind of segues into another topic or question I had for you guys, which is, we get down to it. My experience is it's really, on a facility by facility, general manager to supervisor level that, determines whether or not you have a stellar operation or mediocre one, or one that's perhaps not providing the kind of customer service you need. So what are the kind of key things that a good operator in this space needs to focus on? So kind of, you think about a facility by facility basis, in order to not only provide good customer service, but while you can maintain profitability, right? There's a lot of moving parts in these locations, depending upon the kind of product mix that's moving through it, depending on whether it's a port operation or a freight consolidation location where you have a lot of labor and complexity on case picking and so on and so forth. So either Adam or Carlos, if you can think about, what are the key P&L line items? What does an operator have to think about to prevent any issues affecting either performance financially or customer service?
Yeah, I covered also this. I will let Adam talk, but he will cover the next set of questions. So it's not just going to be me talking here. So I think, again, I would almost go back to basics. So service. I think, making sure, yes, you can have a very technological advanced warehouse management system, or you could have a best-in-class, energy plant to limit the consumption and power, which of course will save cost and allow you to be competitive. But at the end of the day, responsiveness, quality of service, I think that is the most important aspect in relation to performance, and making sure that, and of course, having an organization and a local team that, that we can, that can perform, that can make decisions, etc. I think, in my opinion, are some of the most important criteria. Of course, technology is important. Of course, having a track and trace system is important. Of course, making sure that you're, from an engineering and maintenance point of view and energy consumption, you have a sound facility, of course, is important. But, other than that, I think unless that you can provide, receive and ship product on time without errors, making sure that communication is continuous. In many cases, we have customers based in our cold store. In other cases, not, but there is a continuous, link and communication. And, I think that, I know we will talk later probably about COVID, but during the COVID time, especially, the initial months, customers had to react very quickly to a variety of things. And, having a responsive organization that can react and adapt to continuous changes, I would say, in my opinion, are some of the key, aspects or criteria or parameters to, that customers at the end of the day are looking for.
Excellent. All right, Carlos, thanks very much. Yeah, we are going to touch on some of those COVID-related items in a second, but I guess following through with that line of thought, and understand there's been a lot of consolidation in the market, not only just in the U.S. but elsewhere in Europe, especially over the last 10 years, with folks like some PE firms and large strategics like our former employer, Americold. But so that obviously deploying a lot of capital in the space. It's super interesting to them. What do you think is driving the pace of that capital deployment and the consolidation? And do you see that continuing in the future? Assuming that credit and equity markets kind of return to, if there is a new normal kind of post-COVID, what do you think this is a sustainable thing? And maybe I'd love to get your thoughts about that and why.
Chris, maybe I can take this one. give Carlos a rest. I think there's a few things. As we think about our industry, food is pretty resilient to market downturns, to economic and political events. Yes, we see shifts in demand patterns depending on the commodities, depending on the mix in business that we have. And personally, coming from the automotive industry before I joined the food industry and the cold chain, one of the most resounding things that sticks in my head is when we see a market downturn and when we see a recession, people stop buying the luxury goods, plants shut down very quickly. We see that a lot less in food. And so I think as you start to see that, as I said, while you see overall shifts in demand, you don't necessarily see a depletion in volume. And so particularly in frozen food, I'd say it's a very stable commodity for us. And that's, usually recession-proof to a large degree. So I think that's really attractive for incoming investors. I know Carlos has also touched on the barriers to entry before. I think, there's obviously the capital side. What I would say is also quite a niche sector. When you think about logistics, and when I think about logistics, it's very customized in terms of a cold chain. There's a lot of expertise needed that you don't necessarily need that level in ambient logistics. So, and particularly when I talk about that, it's within the four walls. So, running a warehouse or temperature controlled facility, very different from running an ambient facility. Yes, you have product movement in and out, you're storing products. There's a lot more complexity in terms of temperature considerations, tolerances, potential product liabilities, also keeping the systems running. So I think that is a large barrier to entry at all. And so you end up having less larger players, and it leads into somewhat of a fragmented industry. And particularly outside the US, I would say, in the US, we see more consolidation, to your point, and I think we've seen less of that outside the US, starting to see more of it in Europe, and I think we'll touch on that a little bit later. A couple of other things that I would mention is the demand is outstripping supply of cold storage space, and specifically good modern assets. There are hundreds and thousands of facility shops, older facilities. But what we see, particularly in our key markets, is the occupancy rate is extremely high. And in certain locations, if I pick the UK, for example, we've been recently talking to many customers, and the frozen space in the UK is basically depleted. Everything's full. And I think there's a combination of things around that, some linked to COVID, some linked to Brexit, but I also think some of it's linked to, just population growth, consumption patterns, and a lack of space and a lack of infrastructure going into the market. And when we see infrastructure going into the market, a lot of it is dedicated space for customers and not necessarily PRW space where we can support several customers in the 3PL market. So you start to see some of that, and obviously that becomes a little bit more interesting for investors coming in. I also believe that, buying into the industry as opposed to starting from scratch, for many of the reasons Carlos just mentioned, is a good way of getting into a cold storage and temperature controlled industry. Because of the years of experience, the depth of experience, the commodity expertise, the relationships that have built up over time, I think that becomes very attractive for incoming investors to essentially buy 3PLs and cold storage players that exist already, as opposed to start something themselves, because getting to strong earnings through the latter is going to be more challenging.
Adam, thanks very much. And I guess as a corollary to that, how do you think about whether it's the AGRO portfolio or just for someone, if you were to kind of think about entering the market and the mix of kind of own versus lease assets that kind of thing, and the importance as part of the model here. So kind of just a general thought of, I get a lot of questions about, is it really important to actually own the underlying warehouses or transportation assets, which I know you guys don't own a ton of, but versus leasing. How do you guys tend to think about that in terms of strategy and overall kind of return profile?
So I think it truly, and I'm trying to not sit on the fence here, but I think it truly depends on the investor's needs and what they're looking to get out of this. So there are companies there, look at Americold, for example. It's a REIT that I'm sure they prefer to own all of their assets. When we talk about assets, I'm talking about warehousing. There's other players out there that have a combination. AGRO has a combination of owned and leased assets. I think for most investors, they want long-term stable returns. So I see very few players who would have a portfolio of leased facilities on short-term leases, because I don't think that's a sustainable business model. What I think is a sustainable business model is a combination of owned and leased, and setting up leases on the long term in key markets. So we also see operations whereby you may flex your space and take down short-term leases, but that's really to complement your network as opposed to be what I would say a foundation and a platform for your network, because I don't think that's, again, a sustainable business model. When it comes to the transportation side, Chris, I think the way we view the world, and I think a lot of our competitors probably view the world, is owned assets on the transportation side. You typically don't see it with the temperature controlled full logistics solution players or the main ones. I think you'll see a lot of brokered transportation, certainly on the outbound side. Where we tend to own our assets is really on the more, I would say, stable, repeatable process lanes. So whether that be full truckload going out, but more importantly from our business is because we're very port proximate on the drayage side, bringing goods into the port or from the port to our facility, or on the export side, taking it from our facility out, because it's essentially a closed loop. In that situation, then I think it's more profitable typically to own assets, providing that you've got, stable and sustainable volumes. Where it's more challenging is where you see, for example, in very seasonal business, where you can only deploy, it's essentially a fixed cost in your business, and you can only make that profitable for 2 to 3 months of the year. That's when you would start to look at creating a very core fleet of owned assets, and then flex according to potentially renting or leasing space on trucks.
Yeah, I think, I agree with everything that Adam said, but we'll add that our preferred model is owning the facilities and the real estate, and also adds that, it's not only the return profile, but also flexibility. If you want to expand, if you just have full control of the real estate, or what you can do in your property, and from a valuation point of view, of course, and return is our preferred model. I would say there is only one, large sizable acquisition that we made at some point, where that company, has already done a sell and lease back prior to AGRO. The rest, 90% of what we have is on real estate. And in 50% of those locations, we have expanded over the last 5 years, and we are in the process of expanding in 4 more locations. And yes, you could do that if we were leasing the buildings, but it's just different, and the flexibility is greater. And that is why it's our preferred model, for sure.
Excellent. Thanks very much, Carlos. So in the remaining 15 minutes or so, I kind of want to pivot a little bit and ask a couple of questions specifically about how COVID may have changed the storage industry, cold storage industry environment, and specifically how you guys have kind of dealt with it. So, I imagine the last 6 months, guys, the entire management team has been a little challenging, to say the least. Anytime you're managing and providing service to supply chains, you unfortunately have to feel the ripple effects, both up and down chain, supply levels changing, ebbing and flowing. In your model, quite a bit of import-export trade, which is then tied into vessel capacity that kept moving around quite a bit in the first part of the part of the year. But obviously, it appears you guys have really done a nice job of weathering the storm so far. But as you think about the last 6 months of 2020, how has the pandemic and all the fallout changed the way, I guess, the way you think about the business and the future growth prospects in the industry as a whole? So I'm thinking specifically, Carlos, as you're looking at the business and had to manage it pre-COVID, were there any unique things that came out of that are probably going to continue to have to keep an eye on or change the way you manage the business?
Sure. So I think, I think we were very fortunate that just when COVID started, I'm talking at the very, very early days of this year, end of January, if I remember right, or something like that. So obviously nobody knew what was going to, happen, just, how bad was going to get from a health and safety point of view, a number of deaths globally and all of that. I think we were extremely fortunate that our board and, the Oaktree Capital team especially, immediately at that very early stage said, look, guys, this is not something that is going to last a month or two. This is truly serious. And, at the beginning, I thought maybe they were exaggerating a little bit, but they brought a couple of third-party experts in this type of situations. Not COVID, of course, because it's so new, but in pandemics and major, how would you say, maybe, difficult situations, if you like, that are not normal on a day-to-day basis, like, when there has been an earthquake or something somewhere. Anyway, so they help us to immediately get on as much as we could on top of things, develop a responsive plan. We set up a team of people that included myself and several people from the ELT and several third parties. We had the first 90 days, a daily call. We prepared a response plan. We implemented all sorts of measures in the cold stores, not only for our employees, but also for any person that will come in and out of the facilities. So that is all more from a health and safety point of view, from a revenue point of view, from a product profile point of view. Of course, we try to get ahead of, if you like, of the game and said, okay, food service is going to be seriously impacted because the closure of restaurants and hotels, etc. So we develop a plan at the very early days, and talking now February time, to see how can we mitigate or limit the impact from a commercial business point of view. Of course, first we did the health and safety for our employees, but immediately after we look at all aspects of the business, especially from a revenue and commercial point of view, what can we do to mitigate the effect? Or, also what can we do for type of businesses that are going to handle more volume? What can we do to onboard, to accommodate those or facilitate those? And, so what I can say sitting here today is that, the business is performing really well. And some of the changes that we made and implemented early days, have been, very successful. We are on track with our 2020 budget that was developed prior to COVID. So, and I think we will end the year, of course, we still have a few months to go, quite a few months to go, but sitting here and seeing how I think things evolving, I think that, we are going to not to see a negative impact of COVID. I would say neutral for us, or even on the positive side. Now, if you look at every location, every country, every customer, we have a variety of things. I cannot say everything is rosy and perfect. Of course not. Some customers and product flows have increased because COVID. In other cases, especially food service, we have seen a negative impact. I would say in the retail industry, we do business with 3 large retailers in the UK, the Netherlands, and the US, and Chile, actually. And, volumes and performance, our performance with them has been very strong because they are really, their sales are increasing. So again, it's not all rosy. I guess we have been fortunate that we have a very diversified customer base, and also a very diversified from a commodity point of view between fresh produce and seafood and meat. So yeah, I don't know if I'm answering your question, Chris, but a lot of changes have happened, and we have had to deal on the go with all sorts of things the past months.
No, that you were into my question, Carlos, and I thank you for that. I think kind of that those were sort of the things I was trying to elicit from my question. I guess kind of a follow on across G2 in the last 3 or 4 months, we've obviously been with when we're on the phone with investors or our clients themselves, we deal with trying to understand the COVID related costs that these companies, and this is whether it's transportation and logistics, it's our industrial and manufacturing sector, or our technology and business services practices. What are truly one-time versus kind of what we anticipate to be part of the new normal and have to be built into the P&L. So whether we're trying to help companies provide valuations or we're doing diligence, I guess, have there been any significant cost upticks to your P&L that you've seen as a result of this, and kind of anticipate remaining with you as you go forward, and we hopefully have this COVID thing in the rearview mirror?
Adam, do you want to cover that? So
Yep, no problem. Well, so first of all, Chris, I think what COVID has taught many companies is to expect the unexpected, and I think Carlos covered a few points that nobody foresaw this happening, and clearly it's changed the world. A lot of things that we've seen, I would say, in the short term have been one-timers, and when I talk about that, it's investment in infrastructure within our site, facilities to protect our employees, whether that be temperature monitoring, whether that be, perspex or glass screens, segregating employees, whether it be changes to employee welfare areas, trying to maintain social distancing and providing the facilities necessary. So I think from our standpoint, that's been a lot of a short-term one-off type spend that we would see. I think the other thing is on an ongoing basis, I believe this is just going to change the way people view, cleanliness, sanitation. Clearly, the food industry, as you would expect, you need it to be in an extremely sanitary condition. But I think people are going to go, and companies are going to go even above and beyond in this new world. And so, from those kind of expenses, PPE, employee uniforms, sanitation supplies is clearly going to go up on an ongoing basis. I think that's not going to change. A couple of other things that we've seen is really on the vendor side. So, on equipment, on construction, for example, where we're building new sites or where we're implementing new equipment, lead times have been delayed. Premiums have been charged on construction activities due to contractor availability, or because manufacturing plants have stopped, so we're unable to source steel. So we're looking at this as fully rounded. We've also from our employees side, we really obviously want to look after our employees, protect our employees, but also in the unfortunate event that we've seen our employees test positive or had situations where families testing positive, we've tried to look after those. So I'd say we've paid a slight premium in terms of kind of bonuses to really make sure that we help them through the activity. So as we talk about one-timers, I can see that happening as well. In terms of the consumption patterns, just going back to the question that you had before about how do we see this change in things. One of the things we've seen, for example, in produce is the consumption patterns in the market by the end consumer is changing. A good example is on peeled fruit. So, peeled fruit, we've seen huge spikes. Clementines, for example, and citrus volumes are through the roof at the moment. Whereas volumes on, produce such as apples are down. And so what that leads us to is trying to figure out, is that a sustainable trend that we're going to see, or is it linked to COVID? And that's what we've got to think through, because that obviously affects our investment plans. It affects our product flow planning for some of our produce sites. So all of these considerations we have to take into account, and ultimately will affect the P&L.
Excellent. Thanks, Adam. And I kind of maybe just stay with you for a second, Adam, until you get worn out, and then we'll pivot to Carlos. But you've had a ton of experience, right? The last 10 or 15 years at Maricold and AGRO, especially around capital projects. And I've had the pleasure of working with you on those, and whether that's M&A or growth capital expansions that Carlos referred to that have occurred recently, or technology and automation. What do you see? Any new changes or redirections around investment in agro, or as you think about the industry as a whole here, whether it's technology, IT systems, or automation within the physical facilities that are going to be required to kind of change with the new normal here?
Chris, I would say that in our industry specifically, we've been, I would say, relatively fortunate, going back to my previous point about resilience. I think that's also been applicable for COVID. Yes, we've had some immediate challenges that we've had to pivot towards and really overcome. But prior to this pandemic starting, we were already seeing significant build in the market. And that's in a lot of markets that we're seeing, particularly in the US, we're seeing a lot of that. There's a shift definitely to automation, but I don't think that's anything linked to COVID. That was already happening. We still see conventional builds, we see automated builds. It really depends on the application that you want. So I don't see the COVID necessarily changing that perspective. One of the things that I've been extremely surprised about is, and Carlos touched on this with, the performance of AGRO, for example. It's been a very good year. I mean, we've had, obviously, while we're getting to grips with things in February, March, April timeframe, and really understanding the shift in mix in our business from food service to retail. And, as restaurants start to reopen, schools are starting to somewhat reopen. We're starting to see the increase again in food service. But we've seen a constant growth, continued growth, expansion of networks. We're seeing all of our competitors build. We're building. We've just announced another build in Ireland last week. That has been probably the most surprising thing for me, that we have been resilient to this pandemic from a capital investment standpoint. And I would argue that, I don't think that's changing, and I don't see that changing. When I think about our pipeline, and I can imagine competitors' pipelines, my earlier point about supply being outstripped by demand for cold storage space, I don't see that happening, because ultimately, consumption is consumption. The population is relatively in growth perpetually. So, I don't think that's going to change anything when it comes to food consumption. It's just going to be, what types of food and where that comes from.
Got it. Well, listen, thank you for that. In the interest of time remaining, I kind of want to pivot again now, just touch a little bit on e-commerce. There's been a lot of debate around that. Obviously, Amazon has driven a tremendous shift in terms of expectations of consumer deliveries and customer service, and it has placed a lot of pressure on third-party logistics providers, largely in the dry space up until recently, to try to rework their supply chains, their physical network, in order to be able to deliver in kind of same day, 1 day, two day deliveries. And I think one reason for that is food has historically not been one of those categories purchased online in heavy quantities, because it either requires that tactile quality judgment call that we all kind of like historically, or a function of the temp control third-party network not having the infrastructure or ability to kind of perform the fulfillment of those kinds of things as they're required. But lots changed, and I think coming out of COVID, by necessity, people have been buying more online and having home food delivered to them. So with that as a backdrop and time remaining, and keep this brief, I'd like to get your perspectives on the convergence of e-commerce and the cold storage industry. How do you think about that? Do you see a fundamental shift happening with respect to your industry, and so on and so forth? So, Carlos, do you see the need to change how or where frozen or refrigerated products are stored or managed or deployed based on e-commerce?
Sorry, I think that there will be, over time, things will evolve and change. But at the same time, I think it depends a lot on where do we fit within the supply chain. So when I mean we, I'm talking now about agro merchants, So I think in our case specific, so I think that the industry will change over time. When I see, however, the next 10, 15, 20 years, I think depends a lot of where the cold store, what role the cold store plays in each location within the overall supply chain. Like, for example, in our case, I'm generalizing now high level, 65% probably of the products that we handle, store, and supply production facilities, because we store a lot of raw meat, seafood, dairy products, etc., that they need to go through a next phase of processing and package in order to get to the end consumer. So, I personally don't expect any change of e-commerce, because at the end of the day, those products still will have to go from the farm to one of our facilities, and at the end of the day to the processing facilities. In other cases, we are doing business for retailers, and some of those retailers are also entering into e-commerce. Now, the part where it's changing for us, and is critical that we can cope with the speed and the pace of the change, is what I was saying at the very beginning today, the customization. The way how customers are asking us to repack product, I think it is increasing on a tenfold in relation to the number of type of SKUs, number of type of packagings. Satsumas or oranges, in packages, no anymore of a bag of 10 or whatever. Is now 2 units, 4 units, 6 units, with this label, with that label. So I think as long as we can accommodate that level of customization, because we are prepared to invest in tooling, equipment, training, etc., I don't think that will have a huge impact for the cold storage business. Of course, if you have a cold store of 10 and you are not able to cope with that change, and those changes in demand from our customers, they will have to find an alternative solution that will be taking it somewhere else or doing their own thing, etc., etc. So, so to answer your question, Chris, yes, I think that the industry will change over time, but I think depending on the the role that the cold storage company plays in the overall supply chain, and if the company is able to, move with the times and evolve and get more sophisticated, I think I see many, many opportunities rather than, the risks.
Excellent. Yeah. Thanks, Carlos. So that was all very, very helpful. I think in the interest of time, a quick wrap up. I mean, I just want to, if I could ask you guys a short and kind of concise question here. If you're looking back on your decision to get into this industry, if I'm an investor or someone interested into it, you're looking back on your experiences, in this case, instrumental in forming a very large cold storage company. What single piece of advice or guidance would you give to someone who's interested in starting a business or entering into this sector vis-a-vis an investment?
Adam, why don't you go first? Because I think Chris is asking both of us. No problem. So I'll keep it concise, Chris. I think very, very carefully about the markets that you want to serve and the services that you want to offer, and try not to be everything to everybody in every location. I think, aspirationally, AGRO looks at a global platform. I think what I would be very, very careful of is trying to spread too thinly across markets that we don't, or investors don't have the necessary expertise, local knowledge. I think one of our benefits has been we've really tried to, marry up the international presence with the local knowledge, and we pride ourselves on that. I think that's one of the key differentiators. So go in, make sure you understand the market, and make sure you know what you want to do in terms of services offered before you go in.
Excellent. Carlos, anything to add to that?
I think Adam has covered most key points. I would also say being humble and, big plans are great, of course, and I would like to triple the size of agro merchants. And I think there are a million opportunities to do so. But, starting, especially if somebody's entering the market for first time, the local culture is critical. Every country is to a certain extent different, and the markets and the segments. So, especially for somebody that is your question, that is starting from scratch or, from the beginning, I think that, being ambitious is great, but also going step by step is very important because, again, there are many differences between the different type of countries, locations, segments, type of commodities, and everything else.
Yeah, excellent. Well, gentlemen, let me pivot to a couple of questions that have come through on the Q&A chat box here. So we talked a little bit about automation and technology. Adam, you may be best for this one. Do you see an increase? A question from one of our audience. Do you see an increase in ASRS facilities being built as a short-term trend, or you think it's? And I would maybe throw in any kind of automated conveyance systems. Is that a short-term play here? Or do you see that's here to stay in the cold storage industry?
I think it's a long-term trend. I think it's sustainable, Chris. I think what we're seeing in technology is when you think about ASRS 10 years ago, they were, had to be dedicated to one customer. They were very much, 10 deep drive-in facilities with, crane systems, but it was a very specific to a certain order profile. I think we're seeing a lot more flexible solutions coming from some of the, the big players in the industry, whether that be Dematic, Swisslog, Schaefer, Viastor. A lot of these guys are really thinking through the end customer and the solution for that. So we're able to handle much more through automated cold stores than we used to be, say, 10 years ago. So I definitely think the trend's here to stay. I also think, just in terms of conveyance systems, we're continuing to look at how we can complement labor forces with automation, and that's within, conventional facilities, whether that is conveying systems, whether that is packing, automation of our repack facilities, so, displace people on the line. Everybody has got labor increases in mind over time, obviously, some of it driven by just indexation, some of it driven by minimum wage increases. And in those markets, you have to differentiate yourself. I don't think everything can automate. I think there's certain types of businesses that you will never automate. A lot of our import-export facilities are so customized that I would argue that we probably wouldn't do that even, 5-10 years out, but certainly automation is here to stay.
Thanks, Adam, and that's helpful. I think another question, and there's a theme, sort of a thematic element here through a number of questions I see here, but we didn't touch on transportation much, and I know that AGRO's got some brokerage business and a little bit of drayage to support, obviously, their port moves in and around those locations. What do you see any trend? What are the trends, I guess, going forward around cold chain transportation? And we talked a little bit about like last mile delivery, certainly e-commerce drives that. Have you seen any fundamental changes, or do you expect anything different in the way in which you guys view your transportation offerings, or conversely, what you're going to be expecting from your transportation providers going forward?
I don't think that we have seen anything new or majorly changing the last year or 2 years. Or we see anything that is going to change drastically in the next 24, 48 months. However, one thing that always, in my opinion, has been different and continues to be is how certain markets operate. So, if you look at the UK and Irish market, in the UK and Irish market, if you want to be a large, player or a player of a scale, you need to have a complete solution. You need to have cold storage and you need to provide transportation. It's not as easy as in other countries where you can say, well, I am just focused on the warehousing and real estate and I outsource or my transportation. If you want to provide quality of service and grow and support your customers. So to me, that is not a change, a recent change. is just something very specific to the UK and the Irish market. You know, if you look at Iberia, Spain, and Portugal to a certain extent, I would say the same, you know, because the number of subcontractors available from a transport point of view, companies of scale, etc., is not there so much from a transportation point of view. Our strategy for Iberia is, you know, slightly different to our traditional strategy that is focused on the cold storage side, and of course, drayage of full truck loads, because it's a very stable, you know, move and revenue stream, as Adam was saying earlier. Other than that, Chris, I haven't seen, at least, you know, a very specific change in transportation, at least from a service offering point of view.
Got it. Got it. Thanks, Carlos. And one final here in the remaining time before we wrap up, but you know, we touched on automation. I asked you, Adam and Carlos, about automation, but we didn't get kind of specific on the technology side. And one thing we've seen at G2 clearly is a lot of interest in visibility tools and collaboration tools, right? Where it became apparent in some cases in the early part of the COVID situation where, you know, we weren't sure where capacity was on trucks, planning and forecasting capacity, whether that's intermodal or transportation, so on and so forth. Are you guys considering any kind of new technologies around IT visibility systems that perhaps are not there or need to be as you think about the new landscape?
I'll take that, Carlos. Chris, I think one of the resounding themes has and always will be, I think, visibility of inventory and the ability to have, I would say, an online and very accessible view for our customers to their inventory. One of the challenges for us, because you asked specifically about our business, one of the challenges that we faced is, you know, we've grown extremely quickly over the last 7 years with, you know, acquiring more than 20 individual companies, most of which were family-run businesses with their own systems. So a key challenge for us specifically is getting towards a better platform on systems, because we know that drives business. It drives customer happiness. It drives some level of differentiation, but I think, you know, there is just something is just stakes of the table. You know, if you want to be at the table, you need to offer certain offerings. So, you know, the basis is a WMS. Some of our WMSs are more sophisticated than others. What we need to aspire to is, as I say, online visibility of inventory. I think our TMS is going to be very important, and how the TMS integrates with our WMSs, so we can truly see throughout the supply chain where our customers' inventory is, and more importantly, they can see where it is and they can react accordingly and proactively plan accordingly. So I think that's going to be a challenge facing a lot of these consolidators. Even when you think about the Americold, the lineages, you know, the guys who are buying other companies, that's going to be probably forefront of their mind, the IT integration, and as part of the overall integration plan of a business.
Yeah, completely agree, and for sure. And so one other question I want to hit, and I know it may run over a bit, but I think it's important. It's a good one, and you may not be able to answer this specifically just because of the mix of business that you have, and so maybe I can jump in as well. But in your opinion, do you think that cold chain for food is going to outpace the need for cold chain for biopharma and vaccines? Obviously, a timely question considering we're trying to roll out vaccines for COVID. We've seen a lot of interest in last mile delivery of pharmaceuticals and other items going into hospitals and nursing care homes and such and so on forth. I don't believe you guys have a mix of any, I could be wrong, of biopharma, but just as you think about it, and in your travels, have you seen interest in acquiring businesses or facilities and capacities growing around supporting the biopharma vaccine? How do you think about that?
Not really. I mean, I think we have done a very small research, I would say a couple of years ago and 6 months ago. You know, we thought about, should we try to enter more into the pharma segment that requires temperature control? But, you know, has been a very high level exploratory exercise because two things, you know, the demand in the food sector, for us at least, has continued to exceed, you know, the capacity that we have. So we continue to focus on expanding and growing in the sector where we know, we have the know-how and we have the expertise and the demand is there. And the second reason, because we haven't done anything, Chris, or explored any acquisitions or things like that, is because it's a very different sector. Yes, it's temperature control. I remember a couple of times over the last 15 years that in 3 locations where we had issues to fill the space from a food point of view, we said, oh, maybe we can move into pharma in these locations because maybe the demand is there. But when you look at the regulatory, the security, the infrastructure, the segregation, I'm sure it's a great business and with a tremendous growth potential. Our conclusion has been let's focus on what we know, the know-how, and we have sufficient demand, not to get distracted. But I'm sure it's a very interesting opportunity.
Yeah, I would agree. I think it's a very specialized field where you've got a lot of regulatory, a lot of lot control, a lot of systems of tracking and tracing that may be kind of unique and doesn't overlay well if you've got a big mixture of food. So thank you for that. So listen, Carlos and Adam, in the interest of time, I really want to thank you both for joining us today, and I really wish you both continued success with AGRO. And to all the members who are still on the audience call, thanks for listening in and your patience and your excellent questions. And at that, I'll close it out. So thanks very much for all your time.
Thank you.
Chris.
Hello.